Every nation on Earth carries debt. America's tab sits at $38 trillion, the highest it's ever been. The European Union holds roughly $14 trillion. Japan approaches $9 trillion. Even wealthy oil states like Saudi Arabia and export giants like Germany and China owe staggering amounts. But here's what doesn't add up. If everyone owes money, who exactly are they paying? This is where finance, power, and history intersect, and nothing works the way you'd expect. Debt isn't just something countries struggle with. It's the framework holding the modern world together. Every war, every financial crisis, every economic boom exists on top of this invisible network of IOUs. And when you trace the creditors back far enough, you find something disturbing. The world doesn't owe money to some external force. It owes money to itself. But that doesn't mean everyone profits equally. To understand how we arrived here, a planet buried under more than $315 trillion in total debt, nearly triple the size of the entire global economy, we need to start at the beginning. The birth of national debt. Long before credit cards or digital banking, the concept of national debt emerged not from finance, but from warfare. In 1694, England faced war with France and was running out of gold. The king approached merchants with a proposition. In exchange for steady interest payments backed by future tax revenue, they would fund the crown. To oversee this arrangement, the Bank of England was established. The innovation was groundbreaking. The government could now spend money it hadn't collected yet. In return, lenders received something invaluable, a government guarantee that could be traded, purchased, or sold. This was the birth of the government bond, the foundation of modern finance. France replicated the model. The Netherlands improved upon it. The newly formed United States embraced it to finance its revolution and westward expansion. National debt transformed from a sign of weakness into proof of credibility. The power to borrow became the power to govern. Empires once seized territory to extract gold. Now they issued bonds to extract interest. The battlefield shifted to the balance sheet. The modern debt explosion. Jump forward 3 centuries, and debt has become the world's primary product. The United States owes $38 trillion. Japan carries over $9 trillion. Global borrowing increases by roughly $1 trillion every 100 days. Every country owes. Every bank lends. Every citizen, through taxes, savings, and retirement accounts, exists as both debtor and creditor simultaneously. But who actually holds the other end of this rope? The American debt structure. Let's examine the United States because its debt isn't merely national, it's global. Of that $38 trillion total, approximately half is publicly held, meaning owed to investors rather than other government departments. About 2/3 of these investors are American: banks, pension funds, mutual funds, insurance companies, and the Federal Reserve itself. The remaining third, roughly $9 trillion, sits with foreign holders. Japan tops the list with around $1 trillion, followed by China at approximately $800 billion, then the UK, Luxembourg, and Belgium. So when people claim the US is indebted to China, they're technically correct, but only for about 2% of the total. Most of America's debt is owed to Americans. The Treasury issues bonds, banks and funds purchase them. The Federal Reserve frequently buys them back, creating fresh dollars in the process. Americans pay taxes that fund interest on these bonds, which then flow into American retirement accounts. It's a circular system. The debt is genuine, but the creditor is largely a reflection of the same mechanism. The global debt circle. This circularity isn't uniquely American, it's planetary. Japan lends to the US through treasuries. The US lends to Europe via the IMF. Europe lends to developing nations through the World Bank. Developing nations, in turn, lend back to advanced economies by storing foreign exchange reserves in Western bonds. It's a worldwide game where everyone holds someone else's IOU, every promise is backed by another promise. Picture a poker table where each player has borrowed chips from the next, and the only rule keeping the game going is that nobody walks away. The real power, the markets. But there's another layer, the most powerful one, the markets themselves. Behind every government bond exists a network of institutions. Hedge funds, pension funds, sovereign wealth funds, and central banks, controlling tens of trillions in assets. They are the true judges of credit. They determine which nations can borrow cheaply and which must pay premium rates for survival. When they lose confidence, currencies crash, governments topple, and entire economies can be restructured overnight. Democracy decides who leads. Markets decide who survives. Central banks, the money manufacturers, and the ultimate market maker, the modern priest of this system, is the central bank. Central banks don't just manage debt, they create it. Every time the Federal Reserve or European Central Bank purchases government bonds, it generates new money in exchange. The liability on one balance sheet becomes the asset on another. Every dollar in circulation represents a unit of debt somewhere else. Debt-free money doesn't exist. Every coin, every bill, every digital dollar carries an invisible IOU. For decades, this loop has sustained itself through confidence. As long as investors believe governments will pay interest, even if never the principal, the machine continues operating. But what happens when confidence wavers? When the system breaks? We've witnessed it before. In Greece in 2010, government debt became unpayable. Bondholders panicked. Yields spiked. The European Central Bank and IMF intervened, but their rescue came with austerity, tax increases, spending cuts, mass unemployment. For an entire generation, bailout became synonymous with sacrifice. In Argentina, repeated defaults transformed debt into a national curse. In Sri Lanka, fuel shortages and political collapse followed when the government couldn't service foreign loans. When the system fractures, creditors suddenly become visible. The IMF, rating agencies, anonymous bondholders who control entire nations. And yet, even after collapse, the same logic restarts. New loans replace old ones, old debts get restructured. The machine resets with a different name on the same balance sheet. The truth about modern debt, that's because in the 21st century, debt isn't designed to be repaid. It's designed to be rolled over. Governments today don't actually plan to eliminate their debt. Not now, not ever. This isn't conspiracy, it's policy. When individuals take loans, they're expected to repay the principal, but governments operate differently. They treat debt like a subscription service, issuing new bonds to pay off old ones, a process economists call refinancing. Interest becomes the actual product. The rent charged for stability. The global economy now depends on that rent, like a shark that must keep swimming to breathe. The perpetual debt machine. The global financial system runs on confidence, not repayment. The United States will never clear its $38 trillion debt. It will refinance forever. Japan has been rolling over its debt for decades, now exceeding 250% of GDP, yet its government bond yields remain near zero. Investors aren't waiting to be repaid. They're waiting to renew the agreement. Why? Because for them, government debt is the safest collateral available. A U.S. Treasury bond isn't viewed as a liability. It's an asset, the foundation of global markets. Pension funds hold it. Banks use it as security. Central banks treat it as money. The system depends on governments never paying off their debt. Because if they did, the world would lose its most trusted financial instrument. Imagine if Washington somehow decided to eliminate every dollar of debt. Banks and funds worldwide would suddenly lose their most stable asset. The dollar supply would shrink dramatically, triggering deflation and collapse. Paying off the debt would destroy the very mechanism that makes the economy function. So, governments do the opposite. They keep issuing more, not recklessly, but rhythmically. The debt becomes capitalism's heartbeat, pulsing through every pension, mortgage, and market on Earth. The political illusion. That's why when politicians discuss balancing the budget or paying down national debt, they're selling an illusion. The goal isn't to eliminate debt. It's to keep it sustainable, serviceable, and desirable enough that the system never stops believing in it. Because once belief fades, the numbers stop mattering. Confidence collapses, interest rates spike, and the economy built entirely on rolling promises grinds to a halt. That's the real secret of sovereign debt. The plan was never to pay it back. The plan is to keep the world believing it will. It's a closed loop of trust. And as long as that trust holds, the numbers can stretch indefinitely. The inequality machine. But trust isn't evenly distributed. When we say we owe it to ourselves, that's only partially true. Interest payments don't flow equally through society. They flow upward from taxpayers and workers to the institutions and investors that hold the debt. In other words, debt isn't just a transfer between countries. It's a transfer between classes. That's why global inequality and global indebtedness rise together. The system rewards those who own debt and punishes those who merely pay it. If this sounds familiar, it's because it's the same story scaled up. From households to nations, from nations to the planet. Creditors aren't villains. Debtors aren't victims. They're two sides of the same engine. The problem is, what happens when the engine runs out of fuel? When new borrowing can't keep pace with past promises, the final question, that's when the question, who's the creditor, stops being abstract and starts being personal. Because at the top of this global pyramid, there isn't one face to blame. It isn't China, it isn't Wall Street, it isn't the IMF, it's all of them. And us. The modern financial system has transformed debt itself into money. Governments issue it, banks multiply it, investors trade it, and citizens depend on it. The line between debtor and creditor has blurred beyond recognition. Debt once meant bondage. Today, it means balance. But if that balance ever tips, if confidence breaks, the illusion ends. And we'll remember what debt really is, a promise that can't be kept forever.